What's up, y'all? Tim Bratz here. Welcome to the Legacy Podcast. Today I'm sitting down with Boris Van Dyck, who is a local developer, real estate investor, and really serial entrepreneur here in Charleston, South Carolina. He's a rock star from the standpoint of being able to take a business, build it, and then he exits businesses. And then he holds a lot of his commercial real estate long term as well. So we'll be sitting down with Boris, hearing about how he got his start, how he scaled his portfolio, what kind of business stuff he has going on, and where the opportunities are over the next couple of years. Boris, what's up, buddy?
Nice to see you.
Dude, how you been?
Good, good.
So, welcome to the Legacy Podcast. We're hanging out here in Charleston. You and I got connected through some mutual friends a couple years back. You're active in both the residential and the commercial space in town, and it's not an easy market, right? There's a lot of money being thrown around, a lot of big players in town. So I want to talk a little bit about that, but let's go back to how did you get into the development side of things? How did you get into the real estate? How did you become an entrepreneur? Because you got your hands in a lot of different businesses, and seemingly successful in all those different businesses. Right? You've had some big closings, I know, recently, and put a couple bucks in your pocket. So that's super exciting, and I want to talk about all of that, and I want to talk about what's next, kind of a thing. So Let's go back to the beginning, though.
All right. I'm originally from Belgium. Grew up in the Caribbean. My parents sent me to boarding school in Connecticut.
Where in Belgium, by the way?
I was born in just outside of Antwerp, and then grew up just outside of Bruges. When I say grew up, spent all my summers in Knokke, which is Knokke-Heest on the seaside of Belgium. So, spent my time in St. Martin and Anguilla, and then spent my summers in Europe with my family. And then ended up getting sent to boarding school in Connecticut and then New Jersey for high school. Came to College of Charleston in 1994. Very different place back then. And spent numerous years at the College of Charleston. During that time, I was in F&B, working in F&B during college. And when I got out of College of Charleston, I went to commercial dive school, worked in the Gulf of Mexico on oil rigs for a little bit. Got injured, came back to Charleston, and so things from there. Got back into F&B, running some restaurants here in Charleston. Met a real estate guy who's like, everybody, you really should be doing real estate. And I think I was 23 or 24.
And this is from the brokerage standpoint, I assume?
Yep, on the brokerage side. So took a little bit of a leap of faith, got my license, went in and worked for him for about couple of years. We did some residential brokerage, some commercial brokerage, but he was very into development, and so I spent 2 years working on some pretty large multifamily and retail developments. And then '08 hit, and we were actually supposed to close in November on a huge 300 and, it was so long ago, but 330 units. Multifamily development, and then a couple 100,000 square feet of retail up off of College Park Road, and then market crashed, banks pulled out, lost my job, and then had to figure out what to do next. Actually from there I started a company called Icebox, which was a cocktail catering company, and grew that to a couple thousand events a year, a couple hundred employees. At the same time started an event rental company called Event House. With some partners, and we grew that to a pretty big event rental company as well, and exited both of those in 2017. It was a lot of work, and took me away from my family for a long time. So my wife was, she said something needs to kind of shift here. So I ended up selling both of those and getting back into real estate. But during that whole time that I was doing those two companies, I was buying industrial property here in Charleston for the company and things like that. So kind of grew the real estate portfolio, continued to keep my license up, continue to look at opportunity, and so that's kind of grown that industrial portfolio that I have.
So you held the real estate, but
sold the businesses, held the real estate, and then just kind of been building off of that since then.
Who'd you sell the businesses to? Was it private equity? Or did you sell it to the partners? Sell it to employees?
Yeah, so the beverage catering company I sold to my operations director, and then the event rental company we sold to a big group that was out of town, that was trying to kind of gobble up all the event rental companies. So it was good timing. Good timing for me, I guess. With COVID that was looming. But right after that, I kind of got back into brokerage, and really, it just wasn't fulfilling. I don't like, just a deal here, a deal there, and then on to the next one. I like
it's just transactional.
Yeah, very transactional.
And for somebody like you who wants to build long-term wealth, and you got the skill set in order to do more than just selling, right?
Yep.
And transacting real estate. Like you know how to raise money, you know how to improve the property, you know how to stabilize and manage, exit, all those kinds of things. You belong in the development side, or the ownership side of things. From a standpoint of, I want to go back to the businesses you had and the real estate, and I think first of all, you sold one of the businesses to one of your employees, which is, I think a lot of people overlook that there's somebody in your bit, like there's some people who would love to own it, they just don't know how to take on the risk, they don't know how to source the financing, they don't know how to structure it or anything, but they run the entire business already,
Yep.
And that's a built-in buyer that you can, pretty much dictate whatever your terms are that you want to sell it at, and just make sure it makes sense for them and they're set up, and creates a huge opportunity for them. And I think that's one of those things, like an employee stock option plan, or just selling it to seller finance to a couple of your employees that run the operation and are competent and capable. I think that's a great way of doing it. And then, the larger groups, the private equity groups, or strategic buyers that are out there too. Have you seen this big shift of a lot of people? There were a lot of people going into real estate, obviously in 2017, 18, 19, 20, 21, and then over the past 2 years, there's been a lot of people trying to get into businesses and buying businesses and things like that.
Yep.
Do you think that's kind of played out? Do you think there's a lot of opportunity there? Where do you think people are going to trip and fall, and they need to pay attention if they want to buy businesses along with owning their real estate?
Yeah, I think, we've kind of looked at that model too, because we shifted into, residential construction and things like that. We looked at potentially buying out, roofing company and HVAC company and plumbing company. And, it's just, I think for me, that was, it's a big bite to take, because it's operationally intensive. And so I try to keep things a lot more simple.
Yep.
And so that just wasn't the direction for me. I think we can make plenty of money by structuring deals properly, and then other people can make money too, and be part of our deals, and whether it's subcontractors or whatever. But sometimes it's better to sub things out, offload it off your plate. It tends to go faster. In your head, you're like, oh, well, I could do it for half the cost, and by the time you're done, it costs the same, and it took 4 months longer because you try to take it on yourself.
Yep.
So I've learned that lesson the hard way a couple of times. And that's part of kind of what I'm doing now, is instead of doing everything internally, is just partnering with some good people that I've worked with, and just saying, hey, I'll take down deals, I'll get it financed, I'll put it in your court. You knock them out in
Yep.
X number of time, and you can make money. I can give you part of the deal. I can give you a bonus on doing it quickly, etc. So I think there's a lot of opportunity in business. Obviously, I bought the club not too long ago. I did see a lot of opportunity there, but I really first went at that from a real estate perspective. 2.5 acres in North Charleston, the value, the value of the property was twice what I paid for the property and the business. So, and we've been able to double that value just in 24 months.
That's great.
For the real estate. So, I think, businesses are great, but I have found, unless you've got somebody that's a really good, detail-oriented operator that's in your team, you should probably stay away from it, right?
Well, I agree. I think there's several takeaways. One is, it's another business, right? And so people think that I can just buy a business. Even real estate, I can buy real estate and it's passive. It's not passive. It's residual, but it's not passive. You still need active management, property management, asset management, paying attention to what's going on.
Yep.
And, if you're looking to be more passive, I think real estate's a little bit more passive because at least you're secured by a piece of property, by a tangible asset, versus a business. If you think you're going to buy a business and be passive in that business can make you a lot of money, but it can go to zero very quickly.
And I've seen it happen. I've
Exactly.
seen it happen.
Exactly. And I think I don't know if enough weight is being put on that by folks that are going out and looking at different businesses. You need that operator. You need to make sure that there's somebody who's full time in that business, who understands it intimately, on your team, not a third party, right? Running that business for you. That's one. The other thing that you mentioned was you looked at a bunch of different businesses that were adjacent to what you were already doing.
Vertically integrated.
Exactly. And there's people who have no business being in, I don't know, manufacturing, textiles, even if it's a trades business or whatever, and they have no experience in that. And for them to go and learn a new business, it's going to take them 3 to 5 years to become any level of proficiency in that business, versus looking at your line items of where you spend the most money in your existing business and saying, hey, I spend, I spend $5 million a year on insurance.
Well, I was just going to say insurance and legal.
There you go.
I should hire.
And legal. And I was spending at least $1 million a year probably on legal. So I hired an attorney for whatever it was, $12,000 a month. And then I'm looking at different captive insurance policies, right? Those are things that I can either bring in-house or have like as a bolt-on to my business, because I know that I can self-sustain that business all on its own. And I think those are things that people should be weighing a little bit more, as opposed to just being like, I need to buy a business. I want to buy a business because that's the new thing to do,
Yeah. And I think you see a lot of that now online. Don't invest in real estate. You buy businesses. You can pick them up for practically free. They're being given away, like all these baby boomers that are retiring that need to exit, and but I think a lot of people are going to get caught with their pants down on that.
Yep.
And if
the chasing of the shiny objects, right? And that's probably the other point is, you and I have been around long enough, and we've worked at a high level long enough as well, and seen so many opportunities out there, and we see so many people losing time and losing money by chasing shiny objects.
Yep.
And sometimes the time can be more important than the money that you lost, because what's the opportunity cost on that time?
Absolutely.
It's rampant out there, and I think being focused and staying in your lane, I have found, when everybody starts jumping this way to go buy businesses, I just stayed in commercial real estate, and I just allowed people that go and buy their businesses and make a bunch of money, or maybe they do exit, or maybe they don't exit. The ones that do make money come over, and then they deploy it with me, right, as a passive investor. And so it's kind of like the guy selling shovels to the gold diggers. Let them go out, let them go and dig for gold and take the risk and take the gamble, right? How can we refine what other people are doing and chase the shiny objects that other people are chasing? Let them do that. Let them bring their cash back to you. You can then help them multiply their money by investing in real estate.
Oh, absolutely. Absolutely. So, I definitely think that's where things are going.
Yep. So tell me what happened so you sell those businesses, you get into the real estate development side of things.
Yep.
Tell me, bring me up to speed over the past 5 years or so.
Yeah, so 17, 18 was, kind of getting all of my property management stuff. Well, we own a lot of property personally. I own a bunch of property personally. My partner is my father. Actually, he came in with me on the first building back in 2009. We started buying industrial property in the Neck. I think our first building was on Williman Street, right where Home Team Barbecue is. I think it's Blue Acorn now. But bought that, flipped it out after a year. It was necessary for a business, so that was one of the great things was, hey, I bought this property for my business, and then I was able to take that and continue to expand. So, 18, I partnered with a gentleman who was in the senior housing space. He needed some help brokering a piece of property down in Thomasville, Georgia. Started looking at the numbers. It was really interesting. Really started getting into the senior housing thing. We're doing my research, understanding that there's going to be an incredible need for more senior housing units. And so we
was this gentleman an operator of senior housing?
So he worked for an operator.
Okay.
And he worked both, he worked his way up through the system, and then he was a regional director for a couple of, I think 8 or 10 units for a company that had about 140 buildings. And he really wanted to get in onto the development side. And so we ended up partnering, raising the capital for this first project. I had a lot of connections in town, so I brought architects and engineers to the table, really brought the investors in, got the capital, and then we raised $3.5 million for our first project, and it was about a $12 million project. So we started going vertical in 19, and then COVID hit right in the middle of our construction.
Scary, man.
Yeah,
Building.
Very scary.
Yeah, building elder housing, and you're like, what do we do, man? Because I saw groups. One of my big lenders did all senior housing stuff out on the West Coast, and they got friggin' clobbered, man. They were terrified, and they were in the very blue states too, which was even more restrictive, yeah, to operate. So what happened?
Yeah, so Georgia shut down. We continued to build through it. So we ended up finishing our project on schedule, which was amazing during COVID. Our contractor was fantastic, is R.W. Allen out of Augusta, Georgia. They did a great job. Kept the guys working, kind of quarantined the crews, and so we got to the finish line on time. The problem was that the state was shut down, and so for licensure, it was really difficult to get our inspections that we needed and things like that. So we ended up, we had, I think, like 25% pre-leased and couldn't move anybody in because we couldn't get our licensing for our project from the state. And so it took...
because they weren't working.
They weren't working, yeah. So it took almost 3 months from the day that we were done to get our licensing that we can move our first people in. And we lost, we lost 95% of our pre-lease, so we were starting at zero.
No way.
Yep. And so it's just been it was a hard climb out of that hole. So during COVID, and it was just the residual of COVID for the following. I think we delivered 6 months after COVID started, and so that first year and a half just was a brutal climb.
Nobody's moving their family into senior housing. That's the epicenter of COVID spreading.
Absolutely. And we had I think 3 properties that we had LOIs or under contract. So all that went away for new development, and so we just kind of focused on trying to get that one stabilized, and actually still struggling with that project.
Wow.
It's been a bear. Learned a lot. I don't regret ever doing it because the education I got from that first ground up build, because that nothing like throwing everything at your first build is a 12 to $15 million 80 unit build. Learned a ton of stuff. Was able to really bring in all the things that I knew from the real estate side, from raising capital, from my connections with builders and tradespeople, and really kind of learned a lot from that deal, and that gave me the confidence to go out and throw darts at much bigger deals, like the one that we just did in Goose Creek. With COVID kind of crushing our senior housing development company, my partner and I split. We still manage that, asset manage and manage that project down in Georgia, and now I'm learning a lot about negotiating with banks and all the things that you don't want to have to learn, but I feel like the the experiences that I've gotten in this business, '08 hitting right when we were about to close a big deal, and then now COVID hitting right when we're about to deliver our first big deal. There are a lot of lessons there, and I think that it's made me stronger and more confident to take bigger risk.
Yep.
I've never been one to shy away from risk, and I will. For better or for worse, my wife doesn't like it sometimes, but I will go all in on stuff, and she's like, but you don't know that it's going to work, and I'm like, I've looked at this thing every which way. There's a calculation for downside, but everything that we do in real estate, the good thing is that you own the real estate, right? So it's just really trying to figure out what your risk tolerance is.
Yep.
But anyway, where were we on that? So COVID hit, and then
you still have some other senior housing stuff going on, though, right?
Yeah, I actually just last month sold the 2 projects that we have outside of Macon, Georgia, and my interest in the management company. Like I said, I am trying to clean up my a million things that I've got going on that's kind of spread me a little thin. And so, I'm really trying to bring everything back, consolidate, and focus on some bigger, bigger projects, and not be, I'm part of a senior housing management company. I've got interest in, I'm a GP in 3-4 senior housing projects, and then I've got office projects, I've got industrial projects, I've got hospitality projects. So just really trying to I've been kind of cleaning up, selling off some things, kind of trying to refocus. So.
Well, I think when you see all those different businesses, and when somebody's like, oh, well, I have this, or they have 1,000 things that they do on their social media or whatever it is, I'm like, how do you focus, right? If you either need an unbelievable team to be owners of all these different companies, or you're just not focused, right? Those are the 2 carve-outs that I see whenever people are like, I'm doing all these different things. And listen, I used to do all the different things too. You and I have a lot of parallels in our stories of pursuing different business opportunities, different real estate opportunities, different, exciting play. And I'm like, I don't have the bandwidth, right? And I've realized that I'm just stretched too thin. I just don't want it, and I don't want to do all that stuff either. I want a slow morning once in a while. I want to be able to hang out until 10 a.m. and then go relax or do work for a couple hours and then go get a workout in or whatever. So
quality of life.
Exactly.
Yeah.
And so how have you looked at all the different businesses, all the different real estate ventures that you have going? Because you've accumulated a lot over the past 5, 6, 7 years. How have you looked at all those things and said, hey, this one I'm going to get rid of, this one I'm going to sell my interest in, this one I'm going to close down? Was there a calculation that you used? Was there a...
I think I looked at it from, I guess, 2 perspectives. One is, am I really passionate about this space? And 2, what's taking a lot of my time and not bringing me the return, whether it's capital or pleasure or,
Yep.
And the senior housing space was a space that I got in, through the real estate lens. It's an operationally intensive business, and we learned the hard way that I think we fired 2 operators prior to bringing in the operator that I had partnered with.
But those were third-party operators?
Yeah, third-party operators. And
so when you were doing the senior housing, you owned the real estate and you owned the senior housing, but you brought in a management company who would manage.
Correct.
Just like there's management companies that manage apartments, management companies that manage self-storage, there's management companies that do senior housing.
Yeah, and I realized a long time ago, if you're not controlling something, it just leaves a lot of room for
third-party management is horrible.
For things to go sideways.
You have to in-house manage.
Yeah.
One of the things I've realized by getting kicked in the crotch over and over and over again by third-party management companies is that all the big players have in-house property management.
Yep.
All right, and so we got about 2,000 of our 3,000-ish doors right now in-house managed, and there's a handful that are out of state in other markets. where we found some good management. But there's really I've only found 2 good management companies, man.
Yeah,
I've gotten
it's
some
really
horrible
difficult.
ones.
Yeah, and you know that just not having like that right person in place, you know, especially on that deal in Thomasville, has, you know, created just a lag of, you know, trying to get to stabilization. So, you know, we are now like still paying, you know, we're finally operationally stable. Now we're still contributing to debt service. Hopefully, I think we expect by January that we'll be break even. But this has been 5 years. So just imagine like all the accrued interest and all the carry on that has just been burying us.
Took the cost basis from here, and now it's like way up here.
Correct.
So now you're like, oh man.
Yeah.
But the buyer doesn't care about that, right?
Nope.
That money didn't go into the property. That money went to go pay for your debt service.
Correct.
So it's like a new bank doesn't care about that. A buyer doesn't care about that. So it's either now you got to hold it and just pay it down enough and let it appreciate enough, or you sell it and you
take
lose
a loss.
$2. Yeah.
Yeah. So I mean, that's
Which, by the way, isn't the worst case scenario if you have other opportunities where your time is better spent somewhere else.
Absolutely, absolutely. And you know, that's the same conversation actually we were having earlier this week. Was like, do we keep feeding this thing? And you know, so we kind of took a look at it and said, all right, well, we know if by January we're here, then we have an opportunity to recoup potentially, you know, 75 to 85% of our capital, or we can walk away now and lose 100%, right? So I think those are some hard decisions, and you know, got a lot of cash tied up in that project. But you know, again, expensive university, right?
It is, man.
But yeah, so definitely learning curve.
So right now you're kind of taking a step back. You're looking at things that are either bottlenecks for your happiness, bottlenecks for like aren't making enough money, don't give you a return on happiness or a return on investment.
Correct.
And those essentially are the 2 categories that you were looking at in order to eliminate things.
Yeah.
And so what are you focused on right now? Like, where do you see yourself really spending most of your time over the course of the next 12, 24 months?
So, you know, like I said, I've been kind of divesting from some things. I just sold a big project, which, you know, the plan was to develop senior housing on it and some retail, sell off the multifamily. You know, again, a timing bubble. Was supposed to sell the multifamily off, and then the market shifted, you know, a year ago, and they backed, our big multifamily group backed out, and I was like, all right, well, you know, where do we go from here? Had to close on it and cash myself. Had to, you know, figure out how to get that done. Again, you know, learning a lot of lessons. Was able to get it back under contract with a master developer who took the whole thing down. So just unloading things that were taking a lot of my time, unloading some smaller things just to get things cleaned up. And I think really right now for me, it's take a step back and reorganize, you know, my verticals, clean up my verticals, like we were discussing earlier, new property management software, because everything I do in-house, you know, it's me and an accountant, a bookkeeper. I know you guys recommended me hiring a personal assistant,
you need the EA, man.
which I am working on right now. But yeah, so right now I think it's really like taking all the lessons learned, figuring out, you know, what the roadblocks are, what the pain points are for me, especially from a time perspective. You know, the things that are eating up all my time, the things that I don't need to be working on that aren't producing revenue. You know, those things hit me hard. Like just thinking through all that. So restructuring all the LLCs appropriately. You know. I've got a bunch of residential short-term. I've got some midterm executive rentals. I've got some office. So just trying to get everything structured properly, putting trusts in place. Really, you know, the legacy wealth thing. You know, making sure that I secure my future for my kids, and so yeah, just trying to get that base back so that I can move forward with confidence on new projects. You know,
I think that's a big deal, man. I think everybody thinks adding more units or adding more stuff or adding more businesses is the way to grow. Sometimes growth is taking a step back so you can make bigger leaps forward the right way.
Yeah.
And that's what you're doing right now. You're saying, hey, let's consolidate. That's what a lot of what I'm doing right now too. Let's consolidate. Where do we want to be? What type of assets do we want to be in? What type of asset class? What type of verticals? Like, how can we have more control over those assets? And yeah, I mean, we're getting rid of all of our stuff that's out of state for the most part.
Yeah.
We're really just focusing on the Carolinas and Ohio. Not because those are the best markets, just because that's where my team is, right? And we can get to anything within 2 to 3 hour drive. And if that's easier than relying on third-party management, where you got to hop on an airplane, fly 3 states away, rely on their reporting that's never accurate, that's always reactive, that's always delayed, that's always
Absolutely.
and it's like, why? We don't need to do that anymore. There's plenty of opportunity within a 2 to 3 hour drive of where we are here, and where my team is up in Ohio too. So yeah, I mean, I think it shows a lot of wisdom in what you're doing on that side of things.
Yeah, like I said, I think realizing what I'm good at, the things that I'm good at, and then hiring, I think out of a couple of the calls that I've been on is hiring for the things that are not your A game, right? And so I've got a great new bookkeeping accounting company, fractional CFO that we brought on. That's starting with the private club, getting that cleaned up, and then they're going to onboard all of the real estate. So I think bringing on good people. Cleaning up some things. I really like, because of my experience as a broker in the industrial space, I really love triple net leases, and I love not having to be super hands-on, getting the deal done, building things out, getting the good tenants in there, and then kind of setting and forgetting. And it's not really set and forget, because there's always things to be done and things to manage, but it's a lot less hands-on and time intensive than I would imagine multifamily or senior housing is.
No, for sure. No,
I mean, I'm on more calls for my senior housing project than I am for everything else, that I have going on.
I got a good buddy who's a member of Legacy Family. He owns over $100 million of triple net office and retail space. And he's got one employee that manages all of it.
Yep.
And I'm like, what am I doing? Right? I need to be doing.
That's what I like. That's what I like.
Here's the bottleneck on, or that I see, the hurdle that I see with warehouses. You need deep pockets in order to carry this thing while you're waiting on these triple net lease. It could be a year or 2 years of no income, and then they sign a 10-year lease or a 12-year lease or a 15-year lease, and so yeah, you don't have the vacancy on an annual basis, but you have it over the life of the project. And how do you minimize where to find these big commercial tenants, or how do you minimize the timeline and maximize the likelihood that somebody's going to come in and lease it right away?
Yeah, so I think I'm not in the space of building 100, 200, 400,000 square feet on spec. That's not my thing. I really love that little flex niche where you can take a building, whether it's 10,000 square feet or 20,000 square feet, and subdivide it and put some bay doors in it, and and lease it out pretty quickly to people that need it. And in Charleston,
where are you finding those people? You just kind of Are you listing with a broker? Are you?
So I'm a broker. I work at Peninsula Company. I hang my license with Peninsula Company. Okay. So I do all of the brokerage myself. I do all the leasing myself, the leases, the management. Everything is internal, and there's I have one employee, and it's me.
Yeah.
Other than my bookkeeper, but so it's just finding. Typically I find in conversation it's I really need 5 or 10,000 square feet, and then I'm like, okay, well, if I can find you 5 or 10,000 square feet, we can work together, and so then I'll find a 20 or 30, I'll find a 20,000 square foot space, and I have a tenant already for half of it, so it covers.
I like that.
I don't have the pockets to be able to carry hundreds of thousands of dollars for a year or two. So it's really just finding little niche spaces and working with people that are in your network that call me and they're like, oh, I got a friend looking for this, and it's like, all right, well, what can I find? What can I put together with that information and use that leverage.
So you're hanging out in groups of business owners, right? And those business owners know people who are looking for space or whatever that looks like. And then are you listing these properties on LoopNet and Crexy and?
Yeah. So through CoStar and LoopNet, South Carolina MLS. So like I said, I hang my license with the Peninsula Company, so I have access to the residential and commercial brokerage platforms, and I'm part of the CID, Commercial Investment Division of the Realtors Association here in Charleston. So it's just networking with all the brokers and being knowing, like, really, like, communicating what you're looking for, what your interests are, and people know that this is something that I like, and it's like, oh, there's something coming up, and I'll get a call and say, hey, you want to take a look at this? Sure, I'll take a look at it. Been really tough to make things pencil in the Charleston area right now, so I think looking forward the next 12, 18 months, we'll see what happens with the elections. We'll see if this market corrects at all. We'll see where interest rates are. I mean, cost of construction's really high. I think ground up is really tough unless you're doing deals where it's built to suit. So speculative deals are really tough. But I think looking not just in the Charleston market, but maybe looking like Orangeburg and on the way to Columbia and Beaufort, and finding some of these little kind of ancillary markets where people need space. They can't afford what now is like between $14 and $17 a square foot for warehouse space inside 526.
It's wild.
Right. 10 years ago it was $5 a square foot in North Charleston, and there was a lot of opportunity back then. But now it's just trying to find those markets that are easy to get to, where a company that needs storage, say, it's worth it for me to have space an hour out that I'm paying $5,000 for at $5 a square foot instead of $20,000, $15,000, $20,000. So I think there'll be a lot of opportunity there. We've been saying it, I think, for a long time, but with where rates have gotten, all these 5-year terms coming up, people may get upside down in some things. I think that there's going to have to be some sort of correction. I think everybody's been talking about it for a couple of years. We haven't seen that yet, but
how can you think we haven't seen it?
That's a good question.
Because the people have been talking about the market crashing since 2018, 2019.
There's a lot, I think it's very different than like '08. Right now there's just a ton of liquidity. People have cash and they want to put it in stuff, and I think that is very different than '08, where everything crashed and there was no capital, right? I think that there's going to be a huge amount of opportunity potentially, for people in a cash position, for all of these big groups that are just sitting on cash waiting on something to happen. I do believe that. Yeah. Now, like you said, we've been saying that for 2-3 years. When are these 5-year terms coming up? They went from 3.5%, 4%, interest to, I think we were seeing loans in the mid 7s, mid 8s for commercial, 20-year AM, 5-year. We underwrote some deals that, thank God, I try to stay, my leverage, I don't like to be at like 80 or 90, we're usually, between 50 and 60%, so we can weather a storm like that, and I've been very lucky with that, even though we've had to refinance from the 4.5s to, I caught it right before it got really ridiculous, but low 7s, and you take a huge hit on cash flow, and then like we were talking about earlier, insurance isn't helping. I'm lucky enough that most of my deals are triple net, so that's passed on. But that's not helping my tenants, right? It's squeezing them pretty badly, and hopefully you have some people that can handle that, because Otherwise, you'll have some vacancy, and then
Yep.
you'll get stuck in the cycle. But
Yep.
but I do think there's going to be some opportunity. Who knows? We'll see. We'll see. I think after the elections, interest rates are supposed to start ticking down. I don't.
It's supposed to happen this month. We'll see.
Yeah.
I heard,
25 basis points.
bankers are calling some of their clients and saying, hey, here's where we think their rates are going to be. Here's where we're going to be, like just barely above that, and blah, 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 all this other stuff. So, yeah, maybe 25, maybe more. Who knows? But
Yeah.
I think, going back to like what spurred it, obviously there was a bunch of money artificially pumped into the economy
Correct.
too
Correct.
in 2020 and 2021. And so that then takes a year or two in order to kind of then cycle out, and people start buying stuff, and then they run out of that money, and and so it's kind of like that's where we are now. All the prices have inflated, but nobody's got on an individual basis, but the money's been funneled to the big businesses, right? And the people who understand how to manage wealth and be a good steward of capital are in a very good cash position. And it's interesting to see all the dynamics, man. It'll be wild to see what shakes out with this election and what happens from that, because there's a lot of moving parts and a lot of different variables that are involved in that election and how it's going to affect businesses and the economy, and to the point where people don't realize that, right? Like the housing crisis, for instance, is there's no affordable housing.
I was just gonna. That was gonna be a segue to that same conversation.
Nobody's building it, right? Because it costs. I mean,
the same.
It's like, oh well, I can build a house for this much money, but I could sell it for $700,000 or $500,000, right? But like, you physically can't build a house for under $300,000 a home now, and if undocumented immigrants and more of them pour into the United States, that staying away from, I'm just talking supply and demand. There's more people in a lower, more like needing
bracket.
More affordable housing, and there's no more supply coming online for that. So you got more demand, less supply. That skyrockets all prices of all single-family homes under, let's call it $300,000, which means more people are moving into now apartments or townhomes, and they're now lifelong renters potentially.
Yeah.
Which means that many more people moving into apartments means there's more demand now for apartments, which means all those rents are going to skyrocket. And what do? Now people are sharing housing and co-living in spaces and stuff like that.
Yeah, I'm seeing that, and I didn't realize, I think, the extent of that crisis until I bought this private club, right? And so I have staff, I've got kitchen staff, I've got, maintenance staff, or, food and basically like food and beverage and all that. And it's not that they're not making good money, somebody can be making $25 an hour, which is pretty good in hospitality in a kitchen. But, the cheapest rent in North Charleston is $1,200 a bedroom. And it's like, well, how are these people able to afford to do that, right? I've got a young lady who works for me, lives with her mom. Her mom works for me as well, and they found a house, and it was like $2,100, in North Charleston, and I'm like, that is crazy. But then I look at it, the other side is, I'm looking for opportunity in that single family home market in North Charleston, really in kind of like the neck, above the neck, off of Sproul and Rivers and all that. And 5 years ago you could buy stuff in there for $60,000, and now the cheapest thing is $300,000. And so,
this is not a $300,000 neighborhood, right?
No, not at all.
Yeah.
You're buying tear downs for $100,000, and to put a new house, you can build a 1,400 square foot 3-bedroom house for maybe $200,000. You're all in for $300,000. You've got to make a little bit of money on that. Just say it's $375,000, but that mortgage on that is it's insane.
Yeah.
Like, who can afford
$2,000 a month, man?
Yeah. More than that.
Yeah.
With taxes and insurance and all of that.
So you're looking at least $2,000, $2,500 a month
Yeah.
And
so I can't rent it for less than $3,000 a
Yeah.
month, and then so it's a vicious cycle, right? So yeah, it's gonna be interesting. I mean,
Yeah.
I spoke with some people that work in mayor's office, and they're trying to work on some programs to give whether it's tax credits or whatever to build low income housing, but like I just don't see where we're with the cost of construction, like the numbers are the numbers,
Well,
right?
they passed something just a few weeks ago. I heard on the radio that the city and the county, I think, maybe the state, they're giving money as grants to developers to buy land. So the grant is for the land purchase. So that way, and then there's rent restrictions that come with that. So, piece of property is $1 million. They give you $500,000 of a grant. Now you're at a lower basis. But the cost of construction is really the biggest meat of it. That's what the majority of the expense is, not on the land. So it'll help save a little bit, but I don't know if it's worth the handcuffs of having the rent restrictions to only save $500,000 on a deal.
But I think where I've seen this before, and I had a broker friend that was in this where they were buying multifamily, low income. I would say light tech, but they were buying these things with these restrictions, but the restrictions were only for like 5 years, right? So I think there's going to be a limit on the restriction, right?
Yeah.
Where
Light tech usually is 15-year tax abatement.
Yeah, but
but then sometimes it gets extended, or like the 15 years the tax abatement, and then you still have to maintain certain rents for the next 5 or 10 or 15 years. So sometimes it can be pretty punitive, not punitive, but they're essentially giving them free money to build these things. But there needs to be more of that.
We need to find some.
And that means the government's going to start printing more money, right? Because it can't balance a budget. And if they print more money and they start handing it out again, what does that do to inflation? What does that do to cost of goods? What does that do to housing prices? What does it do? Like, it takes more dollars to buy anything now.
Yeah. I mean, I like you said, rent's gone up, and food costs gone up, and insurance has gone up, and these people are still making the same amount of money.
Yep.
And
wages have not grown to the extent of
proportionally with the cost
goods.
of living.
Yep.
So yeah, it's scary, but I think there'll be a lot of opportunity in the markets. Like I said, I think taking a step back, really kind of looking at a couple of different deals.
And so that's the goal. That's the takeaway then, right? Is you just keep your finger on the pulse of things.
Yep.
Stay active. Always be underwriting deals. Always be making offers.
Yep.
Always be talking to investors, hanging out with circles of entrepreneurs who have some money that they might be able to invest with you, and just stay in momentum, right? I think that is more important than finding the perfect deal.
Yeah.
It's just keep on being active in the space.
Yeah. So one of the things that, like, for me, especially with when I kind of pivoted into doing some residential stuff during COVID, because we had nothing going on. So I was like, I'll buy this house. And, I flipped the first house by myself. I used to do that with my father, and he was in construction as well. So I was like, I'll do this one by myself. And it was a small house in West Ashley. And, I think I bought it for $200,000. I put $100,000 in. I did like 70% of the work with my brother-in-law, just because you weren't able to go anywhere, right?
Mm-hmm.
So I sold it, and I made $100,000 in like 4 months, and I was like, 3 months. I was like, this isn't bad, right? So for me, like, I'm looking at those little deals and little things that I can make 50 or 100 or 150 and do it in 60, 90, 120 days, and now that I'm, I think about it a little smarter, like I said, not doing construction in-house and not having project management in-house, just partnering with somebody and, handing it off and being able to do, 3 or 4 times the volume without all the stress.
And the overhead.
And the overhead and the capital cost. And, so that's something that, we're going to continue doing, do 2, 4, 6 houses a year. I keep most of them that make sense to keep for short-term rental or executive rental, and I rarely sell stuff, but we have been kind of shifting some stuff around. But you'll do that, and then you stay in the circles, in the investment circles, and then and then something will come. You know,
I like that.
I'm looking at some trucking stuff right now, building parking lots for trucking. My broker in charge, Sean at Peninsula, has been really heavily looking at that, and they've picked up, along corridors and tertiary markets where, you're going to think about trucking and the trucking for the future.
Yep.
Where autonomous trucking, it's going to be last mile stuff, and you're going to need, places to park trucks, and so we're looking at that kind of stuff.
I think my big takeaway from this conversation has been just looking at your existing portfolio and looking at new opportunities of what brings you the most amount of money for the least amount of headache, right? And we should all be going through that exercise on a monthly, quarterly, annual basis.
Absolutely.
Looking at your existing portfolio, looking and asking yourself about those questions about new opportunities as well.
Yep.
Is this going to be more money? And I think I was with a group of investors 2 weeks ago, and one of the guys like, my problem is I have too many opportunities. I got too many deals.
Yeah.
And my minimum amount of profit is $50,000 per deal, and I just have too many that I can't take them all down. I said, here's an easy solution. Make your minimum amount of profit $100,000.
Yeah.
You can do the same 50 deals a year, but now you have a more restrictive buy box. You're doing the exact same amount of work and making twice as much money now.
Absolutely.
You're making $5 million instead of $2.5 million, all because you just said, hey, I need to make this much money instead of this much money. And it's the same amount of work, but way more return on his time and return on his investment. And if you don't sit in that room, if you're not asking yourself and reflecting on this stuff once in a while, like you stay in the weeds a little bit too long. You're not working more on the business instead of in the business.
Absolutely.
And so you got to have that 20,000-foot view and look at what you got going on. So
yeah.
Boris, man, great convo.
Yeah.
Appreciate you. Appreciate all the insight and all the knowledge that you dropped, and excited to see where things shake out over the course of the next couple of years, man. You got a lot of good stuff in the works.
I'm looking forward to it. I'm looking forward to it, and I'll see you in Jackson Hole.
We'll be there, bud.
All right.
Hey, hopefully you got a ton of value out of my conversation with Boris. He's got a lot of really good stuff going on. We'll tag him and share his contact information in the show notes, so that way you guys can reach out to him. Make sure you're following him. Check out Paradiso. It's at Paradiso CHS on social media. If you're ever in Charleston area, check it out. It's a really, really cool spot in a really trendy area of Charleston. And so I appreciate you being here. I'll see you guys next week on the Legacy Podcast.